Gold achieved 1985 levels as we discussed in our last week's analysis that this could be second consecutive greener candle, however erased most of the gains towards the end of the week and has closed the week at around 1962 levels. Now what to expect? What does this mean? Can we expect a reversal from here, or is it going to give another bullish candle? Which position we should take in order to profit trading gold next week, we will see with the help of charts and indicators. Before leaving the video, do press the like button, do share, subscribe and comment. Also, press the bell icon which keeps you updated with the twice a day analysis and targets which I share for gold every day without fail. Also, you can join our free Telegram channel in order to get the live updates. Let's start. First, let's start with the daily chart. See, in this analysis, first we'll look into charts alone, followed with indicators. Towards the end, we will conclude, we will summarize our observations and give you the final trading levels. So do watch till the end. Now, look, gold has created a base and a bottom here. You can see multiple trading sessions stayed within the zone. It has given a breakout. And now, if you look at how beautifully it is respecting and trading in this channel. Now, despite erasing the gains, it has still respected the channel. A breach of a channel or a breach of this trend is only if gold trades below 1950-1940 zone. That is, this zone is going to remain important. Remember this fact, till the time gold respects 1950-1940 zone, we should not be treating this as bearish. Only below 1940 we can expect that it is going to trade again on the downside. Now that is first observation. Second observation, if you look at, see multiple candles here also tried to stay above 1980 levels. Here also it has attempted twice or thrice to stay above 1980 levels, failed to do so. Almost similar observation here. Achieving these levels, we have seen this retracement. Now achieving these levels again, we are seeing the retracement. Only difference here is because, see, this was coming after a downtrend, and that is why we can see the downtrend continuing after consolidation here. Now this is coming after consolidation on the base and on the uptrend. Also, you can see this reversal is from the top of the channel. Hence, it has still got the room, got the scope for it to continue its journey till towards 2000 levels and above. This is the only difference here. And one point to note that once it breaks below 1940, it will try to enter into bearish zone again, where we can see a complete reversal, because see, this is the box it is in, trading in. It can possibly continue to trade in the box for a while. This possibility is also there. Also, if you look at, see, when it was above 1984-85, it just stayed there for a while, failing to break on the downside. And now this is, and see, when it was below this, it failed to stay on the upside. Now again trying to break past you. That's such a critical level it is. Now if you look at the daily chart, you will observe rise, retracement, rise, retracement. Now I will wait for next. Point number one, it has to stay below 1954. Here at 1954 you can enter a sell. However, 1947 1941 zone is a greater support, and only if it breaks below this you can further expect the bearishness. So this is clear. Else what will happen? Possibly we have seen couple of red candles. Also here one important point is the swings it has seen and the increasing body. Increasing body size indicates increasing bearishness. However, it is still respected the channel, so we have to be careful how it behaves at around 1954-60 zone. This is going to remain important, else a bounce back from here will fall back or will pull gold further into the bullish channel here, and hence above 1965 levels you can again stay long. Now this is on the daily charts. Also, now let's have a look at the weekly chart. On the weekly chart, see, we have discussed that this is identically symmetrical formation, bullish and similar candle here. If you look at this candle, almost identical. This candle stayed bearish, this candle stayed bullish. Now the next candle here was bullish candles here, which can indicate a opposite movement here. Second is that prices fail to stay on the higher side here and have seen a pullback. Now this indicates that possibly the room on the upside is limited, and that is why it is trying to show or pull back. And the last observation here, look at this candle. The body size is almost $30 and the complete move is almost $50. And if it opens above this, trades at above 1965, possibly you can expect a $30 candle here, which means it can try to go close to $2,000 levels in this candle. It has to break past 1973, 1984, 85 zone, and then directly we may see it hitting 2000 levels. It can give a bullish candle here. Now, one must note here that higher highs and higher lows rather, you can see for the next candle is also limiting its movement till 2000, which is also a good resistance zone, and slightly higher, maybe 2005 2008 zone. And on the downside, you can see the support. First of all, for the next candle, the support is here at 1940 and 1950 levels. So these two levels you should watch out for. Now look at the weekly charts here more closely. You will find, see, triple bottom, since then rise, sideways, or you can say bullish, increasingly bullish, then the retracement, rise, sideways, then the retracement. And it is, see, but this time this retracement is after breaking the channel here, and in fact the bottom of this channel is also little higher, so we have to be watchful of the bottom of the channel. However, it appears that after the retracement now it is looking forward to an upward move. Let's watch out how it behaves at around 2000 levels. Also in the long run, we have seen that it has formed the flag, it has breached the flag here, continuing its upward journey. Coming to the monthly, look at the monthly charts, rise, retracement, and now again pulling upwards. Also, one must note that on the monthly charts, it is still respecting the channel, trying to bounce back. What could happen possibly? See, it is almost identical candle here, and one must note the delta difference between the lows of the previous month and this month. This is almost $10, and if you count $10 from here, 1895 levels and 1995 or 2000 levels, this could be probably the upper limit for gold here. So this is where you should be watchful of, and this appears that we can still look forward to close to 2000 levels next week, and a closer below 2000 levels. That is what I will expect. Now let's have a look with the help of indicators. What are the indicators are suggesting? If you look at the indicator, the 20 period moving average is little below. It tried to move till towards, failed to do so. Now again looking upwards. Yes, bullish. All the three moving averages are lying one below each other, indicating bullish. Good sign for gold on the near term. Yes, it is trading well below Bollinger Bands, and it can continue its journey towards the top of it. The stochastic has dropped. It was slightly overbought, and if you look at the moment, it is still got some room for it on the downside. But look at MACD. See, MACD has completed one cycle. It is continuing its second cycle, which means that in the coming few months it may continue to trade bullish. And see, one point to note here is that it can continue on the upside, but look at the journey on the downside. If you look at the journey on the downside, it was still mostly sideways. However, the MACD has dropped sharply. So here one has to observe whether we can expect a sharp, smooth bull run like this, or is it going to be sideways. So this is something I will wait. Maybe it will continue again till 2100 to 1800 levels. This is also probable, but right now it is still very much bullish. The RSI is looking upwards again. Coming to the weekly chart, see, on the weekly charts, the prices stayed above this moving average, converged here, converged till towards the 50 period. Now again looking upwards, maybe it can diverge. A double top also can be expected here. Then the next observation, the stochastic, which was oversold, now looking upwards, lower highs are created here, and it is still room. The MACD, now see, the MACD is trying to just converge while it has still room for it to continue on the down. So this is happening just because the divergence was too much. The candle size has peaked here. It is trying to converge. Probably this may not cross over, which means couple of possible green candles, and then again continuing its journey on the downside. So yes, gold still has a bearishness here. You can see this is the first cycle. The second cycle may end here when it will continue with on the upside. So we will definitely observe how it behaves next month. However, on the long run it is bullish. In the near term, possibly it could try to retrace a little. RSI looking upwards, or not only retrace a little, but it can trade sideways, or maybe it can achieve higher highs or you can say bullishness, increasing bullishness, and the bearish candles or the retracement candles are going to remain smaller such that the MACD continues on the downside. So there are probability. Now coming to the daily charts, on the daily chart, see one thing, moving average crossover. This is very, very important. The 20 and 100 crossed over here, the 20 and 50 crossed over here. This is still keeping gold on a bullish path. And see, this was the 20 and 50 crossover earlier. We have seen this bearishness. Now 20 and 50 crossover is again, see, we can possibly expect a near-term bullishness for next few sessions. Next is this zone becomes important, that is 1940, 1950. It is a greater support now for gold, below which it will try to trade bearish. Now also if you look at, see, it tried to trade outside Bollinger Band, got the pullback. The Bollinger Band width have now expanded. Possibly it could again continue its upward journey. The stochastic looking down, see, it was overbought. Look at MACD. See, MACD was trading with divergence. Also remember, it is after staying there at bottom, now it is continuing its upward journey. It has now tried to converge. Possibly it could again resume the upward move. RSI looking downwards here, indicating slight bearishness. However, it is very much in the comfortable zone. Now we have seen the charts, we have seen the indicators. Time for me to define the trading levels and strategies so that you can trade profitably. And before we proceed, I have one couple of offerings for you. My 24th batch, mentorship batch, is going to start on first week of August. Only limited seats are available now. The tools, techniques and strategies taught over this mentorship batch definitely will help you in your day trading decisions and in order to gauge the profitable trades and the moves of the market in an efficient way. So do not miss this opportunity. Invest in your learning first. Reach out to me for more details. My Telegram and email IDs are mentioned in the channel and video description. Also, you can be part of my signals group where trading as per the signals you can benefit. Now, first let's have a look at the levels to buy. See, I will recommend you to buy here at 1965 levels. Stay long 1973. See, in between this journey, you may see a lot of hurdles. Possibly it is going to get good resistances. Beyond that, we can expect 1984-85 levels. And this time, if it stays above, I will expect it to hit 1996-2004 zone. And possibly it could try to attempt and achieve this zone before closing the month below 2000. This is possible. Beyond that, in fact, 2010, and if it stays beyond 2010, sky is the limit on the upside. I do not see a move above 2010 levels, but these are markets not run by me, and hence beyond 2010 sky is the limit. But let me write down the levels for you just that you can trade accordingly. See, 20, 25, 20, 45. Now here is going to be the maximum resistance again if it continues its upward journey. Now let's have a look on the downside where it is going to go. See, first of all, I will only recommend a sell entry below 1954 levels where you can expect, see, still I will say 1950, 1946 and 1941. Four major support here. Even if it tries to test your patience till 1941, do not give up. It could possibly show a very strong bounce back. Below 1941 is where the bears will kick in. I will look forward to 1930, 1918 and 1910 zone. Chances are very less for this, but again I am saying these are markets beyond you and me, and hence trade with the stop loss always. Take your positions accordingly. Trade with a stop loss, trade with a trailing stop loss. Join my mentorship batch, join my signals channel. Reach out to me for any of your trading or training queries. My Telegram and email IDs are mentioned in the channel and video description. Thank you very much. Have a great profitable trading week ahead. Thank you.